Let's do a little market review, shall we? May 18, 2022. We are looking today at the S&P 500 futures. Post-market, pretty big down day, and want to talk about how to be in position for that and how you could have possibly known that was coming. So I want to look at a couple things structurally here, and then we'll look at the day itself just to kind of see what's going on. So this is inventory from 2021. This is inventory thus far in 2022. Here are small composites for a couple different little distributions. And of note, most recently, if you'll notice the most recent little bouncing area that we have right around here, around 4015, yesterday we had opened right on that and pushed above. It looked like we were on our way back up toward 4153 and ultimately 4200. But then the rejection today. So when we go look at the intraday chart, a couple things of note that were in play. So yesterday was what we call a neutral extreme higher day. So what does that mean? So if we expand the profile here, we will see that we took out the initial balance low, that's the low of the first hour, and then took out the initial balance high. In fact, we did it several times. Low, high, low, high. That is about a 3% day. Now, what we were waiting on, where this big movement happened later in the day, was Fed Chairman Powell was speaking. But ultimately, the auction resolved higher, closing above a couple significant references like monthly VWAP, week-to-date VWAP, and this range here, which was a CPI range from last week, which right now in the market that we're in, anything inflation related is significant to the market. Here's a tighter look of that smaller distribution inventory right around that 4015. And so what was the expectation coming in today? All right, we were actually expecting, it often depends on where we open. So most traded price yesterday was here. If we open in range but above that monthly VWAP, we'd look for a test and then look for buyers to step above and push for new highs on the way up. If we opened above, then we would have gap rules in play. And had a poor high, actually looked for higher prices, which you can see we got slightly higher prices in Globex before the selling started. And we were going to be looking for a push up to 41.21. However, below 40.40, which is a value area low, but also you'll notice there's a number of attempts lower that fail right around weekly VWAP is where it was this morning that was holding the auction. If we opened or accepted below that price, that changes control. It changes the story because the auction is, rather than opening above prior accepted value and then testing that, it's opening below. So once it opens below, then the story opens up all of this. Okay, and if we can't get back above this price very quickly and accept above that, then the path of least resistance is to the downside. And the reason for that is that you had what resolved as a strong directional day the prior day. A neutral extreme day has a high degree of continuation higher. It also had higher value than the prior day, significantly one time frame higher out of a prior balance area. This, in all typical situations, should get higher prices. The fact that you're instead opening right back below all of that is a signal to the market that we have lost that strength. And so unless we take it early in the day, the probability is increased that we'll trade lower. Also, the probability that once we get back inside of this range that we've just got out of, if we get back inside of it, we'll not only come right back here to 4015, but likely get to the other side. And then below that is when it really gets messy. As you can see that we developed into a multi-distribution trend day lower. So ways to trade that. Couple. One is we knew, as part of our plan, we knew that if we open lower, that move back to 4015 was highly likely. So there was an opportunity on the rejection on this open and test lower in A period. So as A period was driving lower, we'll expand this just a little bit here. Just take a look at this. As A period is driving lower, you'll notice there's a naked VPOC here at 40,008. So as if we don't get there in A period and get pullback in B period, that's an opportunity to be short for this price. Okay, so in B period, you see we actually trade up. into A period, not more than halfway back, still inside of this range. So you basically, as long as we stay inside of the CPI range, we can defend and we have a high probability to get here. That becomes the early entry as a prior value test, as an opportunity to get short with minimal risk as you're following that. And then once they take out initial balance low, there's an opportunity for what we call an initial balance go with to the downside. Now that's a little bit harder because at that point we've exceeded the expected range of the product. So then we really need confirmation that we're in a significant trending day before we can get into what's called a trend continuation trade. So you'll see every 30 minutes is lower, lower into lunch. Now, typically, over lunch, we look for a pullback. There's typically one period in the afternoon where we get a pullback. You can see here in G period, we pull back and make a higher high. Than F period, that was actually an opportunity to be short. Now, at this point, you're shorting for the low to come in the last hour because a trend day will have its lowest price at the end of the day. And you kind of have to throw, you have to throw expected ranges out. Any price lower is possible on or higher is possible on a trend day. You're looking for the end of the day. Now, things that would negate this, if we stopped one time framing again, if we were able to clean some of these single prints, if we were able to get back inside the initial balance, trade through halfway back of that would signal that the trend was being challenged, we would exit the trade. Outside of that, we have an opportunity to stay short the whole afternoon. And then ultimately we get close enough that now we're getting in the pull of this naked VPOC way back here from the 11th that you'll see we stopped short of. Okay, so we closed at the low, poor low, high probability of continuation there, lower, and in fact, that's what happened overnight. That traded that. Now, that happened over Globex, not during the RTH session, so we'd expect tomorrow that we would stay south of 50% retracements, that's up to 39.75, and we would tag at least this price. More likely, we're going to retest these lows. So tomorrow we'll look for rotations early. If we open in range or early up to and not to exceed 39.75, we'll look to be short for new RTH lows, this naked VPOC here, and then see if we can push toward new weekly lows after that. So I hope that helps. Knowing day structure specifically, knowing a trend day, knowing a neutral extreme day, knowing a normal day, and so forth. There are 5 open types, 7 day types that we see in auction theory structure. When you know what those are, that's a way of codifying the auction and helping you know what's likely to play out next so that you know, is this a big day or is this not a big day? And when you are able to identify that using the market profile graphic, you've got an edge on everybody that you're trading against. So hope that helps.